Scott Bauer, the CEO of Prosper Trading Academy, joins us now. Good to have you on the show, Scott.
Great to be here, Angie.
Let's start with your Prosper Trading talk. What do you see happening here?
You know, the market's been trading fairly sideways. There seems to be a little bit of pressure, a little bit of concern about what's going on with China and trade in Iran, but yet we see the VIX trading down, pretty much at the lows that we've seen over the last, month or so. So, the sentiment out there really is, maybe we just kind of hover and then move up from here.
Let's get to your Prosper AI indicator.
Yes, so we have some technology that we use at Prosper, artificial intelligence, AI. I mean, you've heard about it, with Tesla and in many other markets, and we use it some proprietary software, and we have a couple good indicators that we like for moves going out over the next week or two. First one is in Salesforce. Now, Salesforce CRM has earnings coming out on the 29th. So what we're actually looking at are options that expire on Friday, June 1st, which would encompass that move. So what we look at, right now the option market is expecting a move in CRM going out to June 1st of about $8 or so. And our AI, our indicators are looking at a very bearish move. So that being said, we're targeting about 117, 118 in the stock based on what the market expectation is. So we're putting out a 121, 118 put spread, $3 wide here. And right now it is extremely inexpensive. We can buy that for about 60, 65 cents or so. So what we look at, Angie, is not just what is the expected move, but what is our reward to risk? What is the expectation there? Well, if I pay 60 cents for a $3 wide put spread, that really gives me 4-to-1 reward to risk, because I can make $2.40 if we hit the target or actually go lower from there. So for us, that is a fantastic opportunity, fantastic reward to risk.
What is your break-even point here?
So 121 is the long put. I'm paying 60 cents. So theoretically, I'd need the stock to go down to 120.40 at expiration on the 1st.
And then a recap on that Prosper profit point.
Yeah, so what we look at, again, is we take into consideration what the market is expecting on a move. We look at that, and in the case of CRM here, the market's expecting about a $7.5, $8 move, really targeting 118. So then we look at, okay, the strikes around there. What makes the most sense? What gives us the best reward to risk based on what we're looking at in the future for a target spot? And, that profit point we're looking at, 118, that would max us out.
TJX also on your Prosper indicator. So what do you see happening?
Yes, earnings coming out next week, and retailers have been all over the board, but TJX looks really strong. Some of the off-market retailers, TJX.
I love them.
I do too, by the way, and I love home goods for TJX.
You know all about this stuff.
I do. But our AI indicator is not really so bullish, but is absolutely not bearish. So what we are going to take advantage of is selling a put spread going into earnings. There's some very accelerated implied volatility, meaning premiums are higher. There's also some really, really fantastic support in this stock between the $82.5 and $83 levels. So if the stock did come down there, we want to get long it there. So we're going to sell a put spread. We're going to sell actually the 82.5, 80 put spread that expires next week. So it will cover earnings. We can sell that for about 70 or 75 cents. If the stock remains where it's at now, it actually goes up, we keep the entire credit. If the stock goes down, if earnings are bad, guidance is bad, whatever it is, stock goes down, that's okay, because that's a point that we want to get long the stock anyway.
Pleasure to have you here, Scott. Thanks so much.
It's always great to be here, Angie.
Check out businessfirstam.com to find out where to see our entire show. And don't forget to like, follow, and share Business First AM.